You should never give the Canadian government hundreds or thousands of your hard-earned dollars for free. Families should know about these tax deductions and credits to maximize their tax return. By the end of this video, you'll know exactly how to optimize your family's tax situation for the 2025 filing year and strategically plan for 2026. We'll uncover crucial deductions and credits most families miss, helping you keep more of your hard-earned money and boost your refund significantly. Child care expenses are a significant deduction for families. For 2025, you can deduct up to $8,000 for children under 7, and $5,000 for those aged 7 to 16. If your child is eligible for the disability tax credit, this increases to $11,000. Generally, the lower-income spouse claims these deductions. The Canada Child Benefit is a vital tax-free monthly payment for eligible families, designed to help with the cost of raising children. For 2025, the maximum benefit is $7,997 per child under 6, and $6,748 for children aged 6 to 17. Ensure your income is up to date with the CRA to maximize your entitlement. RRSP contributions are powerful for reducing your taxable income, especially for higher-earning spouses. For 2025, the limit is $32,490, rising to $33,810 for 2026. Consider spousal RRSPs to balance incomes and minimize tax in retirement, creating significant long-term savings. While not a deduction, the TFSA is indispensable for tax-free growth on your savings. The annual contribution limit remains $7,000 for both 2025 and 2026. Cumulative room for 2025 is $102,000, growing to $109,000 for 2026. It's excellent for family savings, short-term goals, or an emergency fund. The basic personal amount is a crucial non-refundable tax credit, meaning you pay no federal tax on your first $16,129 of income for 2025. This threshold increases to $16,452 for 2026, putting more money in your pocket by reducing your overall tax payable. Don't overlook eligible medical expenses for your entire family. For 2025, you can claim expenses exceeding $2,834, or 3% of your net income, whichever is less. This covers prescriptions, dental care, vision care, and even medical travel. You can also carry forward claims for 12 months for better optimization. Planning for 2026. The multi-generational home renovation tax credit offers a 15% credit on up to $50,000 of renovation costs. This means a maximum $7,500 credit for creating a secondary dwelling unit for a senior, 65 plus, or a person with a disability, promoting accessible and affordable multi-generational living. Also for 2026, the Home Accessibility Tax Credit offers a 15% credit on up to $20,000 of eligible renovation expenses. This gives a maximum $3,000 credit for improvements that enhance safety and accessibility for seniors or persons with disabilities living in the home. Ensure renovations directly address these needs. A key change for 2026 is the reduction of the lowest federal income tax rate from 15% to 14%. This means more of your initial earnings are taxed at a lower rate, directly benefiting lower to middle-income families and increasing your disposable income. Beyond major deductions, explore other credits. The disability tax credit can unlock significant support. Don't forget tuition credits for students, the climate action incentive if applicable to your province, and the first-time home buyer's credit for recent purchases. Each can add hundreds to your refund. To maximize your 2025 return and prepare for 2026, gather all family-related slips and receipts now. Consider consulting a tax professional for personalized advice. Start planning your 2026 RRSP and TFSA contributions early, and review your eligibility for all credits annually. To maximize your 2025 return and prepare for 2026, gather all family-related slips and receipts now. Consider consulting a tax professional for personalized advice. Start planning your 2026 RRSP and TFSA contributions early, and review your eligibility for all credits annually.